Okay, trying to keep up with the tech world, it really feels like you're always chasing something, doesn't it?
It absolutely does. Constant evolution.
Yeah, which is exactly why today we're doing a deep dive into something you've told us you're keen on understanding quickly and properly. Palantir's Q1 earnings for 2025.
Exactly. We've gone through their earnings call presentation, the full transcript, and also a Seeking Alpha piece to really boil it down for you.
Right.
The mission here is simple. Get a clear handle on how Palantir did recently, what their future looks like, and what's actually driving their growth, but without drowning you in data points.
Perfect. And just for a quick baseline, Palantir, they're essentially an AI player, right? Working with both government and commercial businesses.
That's the core of it, yes. AI and data platforms.
Okay, let's get right to it then. The headlines. They look pretty impressive for Q1.
They really do. So overall revenue hit $884 million. That's up 39% compared to Q1 last year.
39%, wow.
And it's also up 7% from just the previous quarter, Q4 2024.
And that 39% year on year,
Yeah.
that's actually up from the 36% they posted before, right? An acceleration.
That's right, yeah. A noticeable pickup in the growth rate.
So what's potentially behind that? Just stronger demand or?
Well, it certainly suggests strengthening demand for what they offer, maybe a wider recognition of AI's value. And a big part of this story is the U.S. market.
Uh-huh.
It's now like 71% of their entire business. Huge concentration there.
71%. Okay, so let's definitely unpack that U.S. market then, especially the commercial side. Sounds like that's where a lot of the action is.
Absolutely. The U.S. commercial growth was, frankly, extraordinary. Revenue there jumped 71% year over year.
71.
Yeah. And 19% just from the previous quarter. They actually hit an annualized revenue run rate of over $1 billion just from U.S. commercial in Q1.
Over $1 billion annualized. That's a serious number.
It really is. And it likely reflects, companies really starting to see tangible results from deploying AI for efficiency, for decision making. Palantir seems really well positioned to capture that.
And does it look like that growth is sustainable? What about the future pipeline in that segment?
Good question. Looking at the remaining deal value, or RDV, in U.S. commercial, that gives us a clue.
Right, the future contracted revenue.
Exactly. That grew by a massive 127% year over year.
Wow.
And 30% quarter over quarter, reaching $2.3 billion. So yeah, the pipeline looks very strong.
So a lot of future business already locked in, essentially.
That's what it indicates. And it's not just lots of small deals adding up.
Okay.
Their U.S. commercial total contract value, or TCV, the value of contracts signed in the quarter, had a record $810 million.
$810 million in one quarter.
Yep, up 183% compared to last year's Q1. And they doubled the number of deals worth $1 million or more.
Doubled them?
Yeah, they closed 139 deals of at least $1 million. And within that, 51 were worth at least $5 million, and 31 were $10 million plus deals.
Okay, so they're definitely landing bigger fish. And more of them.
Precisely. It shows they can secure these, pretty significant commitments.
And it's not just about deal value. The actual number of customers is growing too.
Correct. The U.S. commercial customer count, it grew 65% year over year.
65%.
And 13% sequentially. They're now at 432 U.S. commercial customers.
The sources mentioned some really quick ramp-ups too, like a healthcare company going from zero to a $26 million deal in just 5 weeks after a boot camp. That sounds incredibly fast.
It really does. That kind of speed suggests, well, a couple of things. One, their boot camp or initial engagement model is super effective at showing value quickly.
Right.
And two, customers are seeing the ROI almost immediately and are confident enough to scale up massively very fast.
And there was another one, a bank expanding to $19 million within 4 months.
Yeah, similar story. Start small, prove the value, then expand rapidly. It seems to be a repeatable pattern for them.
And it's not just Palantir saying this, right? There were customer examples. Walgreens, automating billions of decisions.
384 billion daily decisions, according to the testimonial. The scale is just hard to grasp.
It really is.
And then AIG expecting to potentially double their 5-year revenue growth rate because of Palantir's AI underwriting tool.
Doubling their KGR forecast.
Yeah.
That's a huge claim tied directly to using Palantir.
It underlines the kind of, high-stakes, tangible impact they're aiming for and apparently achieving for some big clients. These aren't just efficiency tweaks.
Okay, so U.S. commercial, explosive growth, big deals, fast scaling, happy customers. A very strong story.
Definitely the highlight reel, yeah.
Let's switch gears slightly then to their other big pillar, the U.S. government business. Obviously still critical, even with the commercial side boom.
Absolutely critical. And it showed solid growth, too.
Right.
U.S. government revenue was up 45% year over year.
45%, still very strong.
And 9% sequentially. So, continued strength, continued reliability from that core part of their business.
And they mentioned ongoing impact with things like the Maven smart system.
Yeah, Maven, which is now actually being used by NATO. So that shows
Yeah.
some international government traction building off their U.S. work.
Interesting. And the Titan vehicles for the Army.
Right. They delivered the first AI-defined Titan vehicles,
Hmm.
and apparently that program was ranked as like a top performer. It underscores their ability to handle these complex mission-critical defense projects.
There was also a point made about the government focusing more on efficiency and how Palantir's commercial products fit into that. How does that work?
Well, the idea is if the government needs, say, a data analysis capability, using a proven commercially available platform like Palantir's can be faster and potentially cheaper than building something totally bespoke from scratch.
Ah, okay. Leverage the existing tech.
Exactly. So as government agencies face pressure to be more efficient, Palantir feels their commercially tested products are, a good fit. They're well positioned for that kind of environment.
Got it. Okay, let's broaden out from revenue now and
Yep.
look at the overall financial health. Profitability, cash flow,
hmm
what stood out there?
Yeah, financials looked pretty healthy overall. Their adjusted operating income was $391 million,
Right.
which works out to a 44% margin. That's up quite a bit from 36% in Q1 last year.
So margins are expanding nicely as they grow, shows good scaling.
Exactly. Good operating leverage. And their cash flow looks strong too.
How strong?
Adjusted free cash flow hit $370 million. That's a 42% margin. Very healthy.
And actual profit, GAAP profit.
Yes, they reported GAAP earnings per share of 0.008 cents. So profitable even by standard accounting rules.
The sources mentioned something called the Rule of 40 score going up. What exactly is that metric?
The Rule of 40. It's a quick checkup, mostly for SaaS companies. You basically add the revenue growth rate and the profit margin.
Okay.
So in Palantir's case, their year-over-year growth was 39%, and their adjusted free cash flow margin was 42%. Add those up.
That's 81. Oh, they mentioned 83%. Maybe using adjusted operating margin.
Could be, or slightly different calculation. They reported 83%. The point is, anything over 40% is generally seen as good, indicating a healthy balance between growth and profitability. 83% is, well, exceptionally strong.
Very strong. Okay. And what about keeping and growing the customers they already have? Net dollar retention,
Yeah, that came in at 124%.
meaning
On average, their existing customers from a year ago are now spending 24% more with them. So good loyalty and good expansion within the customer base.
that's a positive sign. And their balance sheet. Cash on hand.
Very solid. They ended Q1 with $5.4 billion in cash, cash equivalents, and U.S. Treasuries.
$5.4 billion.
And importantly, zero debt.
Zero debt. That gives them a lot of flexibility, I imagine.
Huge flexibility for investment, potential acquisitions, weathering any, economic storms. It's a strong position.
Okay, so a really strong Q1 performance across the board, it seems. What are they saying about the rest of the year then? Did they update their guidance?
They did, yes, and they raised it. For the full year 2025, they now expect revenue between $3.89 billion and $3.902 billion.
Which works out to roughly.
Around 36% year-over-year growth for the full year. So they expect strong growth to continue, though maybe not quite at the Q1 pace for the whole year average.
Still, 36% is pretty significant growth. And they seem particularly bullish on the U.S. commercial side continuing its run.
Oh, definitely. They specifically raised their guidance for U.S. commercial revenue to exceed $1.178 billion, which implies growth of at least 68% for the full year in that segment. So clearly expecting that engine to keep firing.
And profitability and cash flow guidance also got a boost.
Yep. Adjusted income from operations guidance raised to $1.71 billion, $1.723 billion. And adjusted free cash flow guidance bumped up to $1.6 billion to $1.8 billion for the year.
And a significant point, they expect actual GAAP profit every quarter this year.
That's what they said, yes.
Yeah.
GAAP operating income and GAAP net income expected in Q2, Q3, and Q4. That's a big step towards sustained standard profitability.
Right. And any specific numbers for Q2, the current quarter?
They projected Q2 revenue between $934 million and $938 million, and adjusted income from operations between $401 million and $405 million.
Okay, so clear optimism baked into that forward guidance. What do they pinpoint as the main driver behind all this momentum?
It really comes back to their core platform, AIP, the artificial intelligence platform,
Yep.
that's consistently highlighted as the engine.
AIP.
They talk about it enabling enterprise autonomy, using AI agents, and crucially, integrating things like large language models with what they call their ontology.
Ontology. That
Yeah.
word comes up a lot with Palantir. Can you simplify what that actually means in this context? Like, why is it important?
Yeah, it's central to their pitch. Think of ontology as creating a digital twin or a map of an organization's entire operations, not just the data, but the relationships between things, the processes, the rules.
Okay, like a semantic layer.
Exactly. It provides the context. So when an AI, like an LLM, interacts with the data, it understands what it's looking at. This number relates to this machine, which is part of this production line, et cetera. It's not just processing isolated data points.
Which presumably leads to better, more relevant AI outputs.
That's the claim, that this deep understanding built up over years allows them to translate AI capabilities into actual business outcomes much more effectively than, say, just plugging an LLM into a raw database. It's their claimed differentiator.
Makes sense. They also kept talking about delivering quantified exceptionalism. What's that about? Just proving ROI.
It's basically that, yeah, but maybe with a bit more emphasis. It's about delivering not just value, but measurable, significant, maybe even unexpected levels of value, quantifiable results that really stand out.
Like the AIG example, maybe.
Exactly, demonstrating a clear numerical impact.
And we see this focus playing out in areas like manufacturing, with that warp speed initiative they mentioned.
Right. They're positioning warp speed as a key enabler for the, quote, reindustrialization of America, helping companies improve manufacturing efficiency, maybe bring production back onshore faster, tangible results in a key sector.
So in this crowded AI space, their bet is really on that ontology plus the ability to deliver those measurable outcomes.
That seems to be the core strategic focus, yes. Combining the deep contextual understanding from the ontology with the power of modern AI, managed through human AI collaboration, to solve complex problems and show the results clearly.
What about the government side again? The budget environment came up. Are they worried about potential spending cuts?
Interestingly, they seem to almost welcome the pressure. Their view appears to be, bring on the scrutiny, let's have a meritocracy.
Really?
Yeah. They believe that if the government really focuses on getting effective solutions and tangible value for taxpayer money, their platforms will stand out and actually win more business, not less. They're betting on performance.
An interesting, confident stance.
It is. Now, internationally on the commercial side, it wasn't all smooth sailing, right?
Yeah, the sources hinted at some issues maybe in Europe.
Correct. They acknowledged some challenges there, but also highlighted targeted growth efforts paying off in Asia and the Middle East. So it sounds like they're being strategic about where they focus their international commercial efforts right now.
Adapting to different market conditions.
Seems like it. And they're also pushing into new areas like that partnership with Archer Aviation.
Ah, yes, the flying taxi company.
Well, electric vertical takeoff and landing aircraft, but yes. They're partnering on AI development for aviation's next generation. It shows the platform's potential reach into, really cutting-edge industries.
Broad applicability. And finally, they got some external validation too. Awards.
Yeah, they mentioned multiple top rankings and awards from Dresner Advisory Services and AI, data science, business intelligence categories. It's good third-party recognition of their tech.
Okay, that covers Palantir's perspective. Now let's bring in that analyst view from Seeking Alpha. Despite all these strong numbers and optimism, the stock price actually dipped a bit after the announcement.
It did, yeah. Which can seem counterintuitive.
So why might that happen?
Well, the analyst suggested a couple of things. One, investor expectations might have been extremely high going into the earnings. Palantir's stock had run up quite a bit.
Right, the bar was set very high.
Exactly. So even meeting or slightly beating expectations might not have been enough to push it higher. The other factor is valuation. The analyst noted the stock trades at a, quote, elevated valuation.
So the market might feel a lot of the future success is already baked into the current price.
That's a plausible interpretation, yes. The analyst was still positive on the company's growth and how it's benefiting from AI trends, but flagged that valuation as a point of caution for investors.
But the analyst did see positive signs in the underlying business momentum.
Oh, absolutely. They specifically pointed to the strong order inflow and that big jump in remaining deal value, RDV we discussed. Those are seen as solid indicators that growth is likely to continue. The foundation looks strong.
Okay. And did the analyst comment on profitability?
Yes, they acknowledged the improving adjusted operating margin, which is great, but they also highlighted the significant cost of stock-based compensation.
Ah, SBC.
Yeah,
That's always a factor with tech companies.
it is. And while adjusted figures often exclude it, it's a real expense that impacts GAAP profitability and dilutes existing shareholders over time. So it's something analysts and investors watch closely alongside those adjusted numbers.
Right, an important nuance between adjusted and GAAP figures.
Yeah.
Okay, let's try and wrap this all up. What are the main things you think people should take away from this deep dive into Palantir's Q1?
Well, I think the biggest takeaway is clearly the significant and actually accelerating growth they showed, especially in the crucial U.S. commercial market.
Driven primarily by.
Driven primarily by their AI platform, AIP. They're seeing really strong adoption there. And based on that Q1 strength, they've raised their financial outlook for the whole year. So confidence seems high internally.
Right. Strong performance, particularly in the U.S. private sector, confidence for the future, all centered around AIP.
That pretty much sums it up. Solid execution across both commercial and government, leading to raised guidance.
And hopefully, for you listening, this dive gives you that quick but solid understanding of where Palantir stands right now and where they seem to be headed, pulling together their own story and some analysis without getting totally bogged down.
Exactly. And maybe it leaves us with a final thought to chew on. As AI like this gets more and more woven into how companies operate, how might platforms like Palantir's actually change the game?
Change the game how?
Well, change the relationship between the tech provider and the customer, especially around, proving value. Is it shifting towards a model where tech companies are judged much more directly on the tangible, measurable, maybe even exceptional impact they deliver?
Moving beyond just selling software to selling guaranteed outcomes almost.
Potentially. It's
Well,
definitely a dynamic worth watching as AI matures. How will value be defined and delivered?
interesting question. Okay, if you do want to dig even deeper after this, Palantir's investor relations website is the place to go. Or you can find the full earnings call transcript online.
Loads more detail there for the truly dedicated.
Absolutely. Well, thanks for joining us for this deep dive today.